In 1929, people were screaming on the streets of New York. A crowd had gathered outside Wall Street. Papers were flying in the air. Bank doors were closing. But in that same city, on that same day, one man was sitting completely calm. That man's name was Jesse Livermore. When the entire world was losing money, Jesse Livermore was making the most money in history. The question isn't how he made the money. The question is, if he understood the market so well, why did he end his own life? Jesse Livermore wasn't just any ordinary trader. He was a trader that the American government feared. In 1907, when America's banking system was about to collapse, Jesse Livermore made so much money that J.P. Morgan asked him to stop trading. Think about it, a single trader that the country's most powerful banker was afraid of. But now think about this, the man who could shake the market. Why did he break down inside? Jesse Livermore didn't learn trading in any college. He didn't have any degree. He didn't read economics books. He learned the market by watching it. At 14 years old, he was working at a brokerage firm in Boston. His job was to write stock prices on a chalkboard. Every time the price changed, he would write a new number with chalk. But Jesse wasn't just writing numbers. He was watching people's fear. He was watching people's greed. He was understanding that the market runs not from charts, but from people's minds. At that time, there were bucket shops in America. These weren't real stock markets. Here people just bet on price movements. Jesse started trading here. Such accurate trading that bucket shops banned him. Let's learn about Jesse Livermore's story, but before that, boost our morale by liking the video and subscribing to the channel. Jesse's father's name was Clapp Livermore. He was a farmer and also did a bit of local trading within the community. Clapp wanted Jesse to follow the same path, work on the farm, and not focus too much on formal education. He believed schooling was unnecessary and of little practical value. Jesse's mother was Abigail Livermore, née Kimball. She managed the household and took care of the children. Both of Jesse's parents came from middle-class rural families, but money was always tight. Because of this, Jesse faced financial struggles from a very young age. While Clapp Livermore strongly believed that Jesse should help with farming and local work instead of investing time in education, Abigail was more flexible. She quietly supported Jesse's intellectual curiosity, even if it had to be done in secret. Jesse Luriston Livermore was born on July 26, 1877, in Shrewsbury, Massachusetts. At that time, America was rapidly transforming into an industrial power. However, Jesse's family was not part of this economic growth. His father was a small farmer, and the family lived in poverty. Money was always scarce. From childhood, Jesse was exceptionally bright. He had a strong memory for numbers and could easily recognize patterns between different things. Despite this, his father was firmly against education and did not want Jesse to stay in school. Clapp believed farming was the only sensible future. But Jesse hated that life. At the age of 14, Jesse ran away from home. When he left, he had only $5 in his pocket and no clear plan for the future. He simply left and went to Boston, which at the time was one of America's major financial cities. This city would become the turning point of his life. In Boston, Jesse found a job at a brokerage office. His position was called a chalk boy. The job was simple. Whenever a stock price changed, he had to write the new price on a chalkboard. Today, in the age of digital screens, this may sound trivial. But back then, the chalkboard was the heart of the market. Every trade caused a price change, and Jesse witnessed every single movement with his own eyes. He wasn't just writing prices, he was observing. He watched how certain stocks moved. He noticed when people panicked. He noticed when greed took over. Slowly, Jesse realized something important. The market is not random. Prices repeat. Behavior repeats. Human emotions repeat. This is where the concept of tape reading was born. Tape reading meant understanding the mood of the market by observing only price and volume. At that time, there were no charts and no indicators, only raw price data. Jesse began to understand the market not through mathematics, but through psychology. By the age of 16, He could almost sense market movements before they happened. During this period, bucket shops were popular across America. Bucket shops were essentially a form of legalized gambling. No real shares were bought or sold. People simply placed bets on price movements. Government regulations were weak, so these operations were legal. Jesse started trading in bucket shops with very small amounts of money. He traded without emotion and only took trades where the probability was clearly in his favor. The result was extraordinary. Jesse kept winning. Within just 1 year, by the age of 17, he had earned more than $1,000, which was a huge amount of money at that time. This created a serious problem for bucket shop owners. Bucket shops made money when customers lost, but Jesse wasn't losing. One bucket shop after another began banning Jesse from trading. This was Jesse's first real confirmation that he truly understood the market. But this is also where ego was born. Jesse started believing that if he could beat bucket shops so easily, then he could conquer Wall Street as well. Around 1900, Jesse moved to New York City. Wall Street was a completely different world. Here, real money was at stake. Powerful operators controlled the game, and manipulation was everywhere. Jesse used the same strategy that had worked so well in bucket shops. But Wall Street prices didn't move purely on demand and supply. They moved according to the plans of big players. Jesse got trapped in false breakouts. He started taking oversized positions, and he lost his patience. The result was devastating. Jesse lost most of his money. This was his first major failure. By 1903, Jesse was almost bankrupt. The failure crushed him emotionally, but it also taught him a brutal truth. The market is not just patterns. The market is a game of power. During this period, Jesse made another critical mistake. He began listening to other people's advice and abandoned his own system. That decision made things even worse. By 1906, Jesse was completely bankrupt. He had no money, no positions, no reputation. But he had one thing left: experience. And that experience would later turn him into one of the most dangerous traders in financial history. The year 1907 was approaching. America was about to enter a massive financial storm. And there was only one man who knew the market was about to crash. His name was Jesse Livermore. By the end of 1906, Jesse Livermore was completely bankrupt. He had no money. He had no reputation. On Wall Street, he was seen as a failed trader. The big operators didn't take him seriously anymore. But Jesse had one thing no one else had: experience. Deep experience in understanding market behavior. During 1906 to 1907, the American economy looked strong on the surface. But inside the banking system, a liquidity problem had already begun. At that time, the United States did not have a strong central banking system. The Federal Reserve did not even exist yet. Banks operated on their own risk. There had been massive overinvestment in railroad companies. After the San Francisco earthquake of 1906, insurance companies came under heavy pressure. Banks were slowly running out of cash. Jesse Livermore noticed all of this. He saw interest rates rising. Call money was becoming tighter. The market was still going up, but trading volume was getting weaker. For Jesse, this was a clear warning sign. He decided to return to trading, but this time, without rushing. Jesse had only a small amount of capital. He started with small positions. He took only those trades where the setup was perfectly clear. By mid-1907, cracks began to appear in the market. Some stocks started falling without any clear reason. Banks became hesitant to lend money to each other. Then came October 1907. A major shock hit the system. Knickerbocker Trust Company collapsed. The public panicked. People rushed to banks to withdraw their money. Banks didn't have enough cash. Selling pressure in the market kept increasing. This was the moment Jesse Livermore had been waiting for. He began aggressive short selling. He wasn't shorting stocks after they fell. He was shorting them before the collapse. He traded fear itself as panic grew. The market fell further, and Jesse made more money. At that time, short selling was viewed as immoral. People believed short sellers were destroying the market. Jesse's name spread rapidly. Newspapers started writing headlines like, One man is making money while the market collapses. The situation became so severe that the stock exchange came close to shutting down entirely. At that time, J.P. Morgan was the most powerful banker in America. He called an emergency meeting and brought together banks and financiers. J.P. Morgan became aware that Jesse Livermore was holding an enormous short position in the market. Jesse Livermore was summoned. In the meeting, Jesse was asked to reduce his short selling because his trading was increasing panic in the system. This was a rare moment in history, a moment when a single individual trader was considered a threat to the financial system. Jesse agreed to reduce part of his position, but by then, the damage was already done. During the panic of 1907, Jesse Livermore made nearly $3 million. At that time, the amount was unimaginable. In today's terms, it would equal tens of millions of dollars. Jesse was a millionaire once again. Wall Street's attitude toward him changed. Those who once ignored him now showed respect. But this is where a new problem began. Jesse started believing he could control the market. The victory of 1907 revived his ego. He increased his position sizes. He loosened his rules. As the market stabilized and panic faded, Jesse began to overtrade. He tried to make money on every single move. The big operators noticed this weakness. They created fake moves. They engineered false breakouts. Jesse began falling into their traps. By the end of 1908, Jesse Livermore had lost a large portion of his fortune again. He wasn't technically bankrupt, but his confidence was shaken. This phase taught Jesse another hard truth. One correct market prediction does not make you a god. The moment discipline breaks, the market delivers punishment immediately. The panic of 1907 made Jesse Livermore a legend, and 1908 brought that legend back down to earth. This is the true pattern of Jesse Livermore's life: a massive win, followed by ego, then mistakes. But now, Jesse was more dangerous than ever, because now he wasn't just understanding the market. He was beginning to understand his own flaws. And that lesson would shake the entire world in 1929. After 1908, Jesse Livermore had money again, but his confidence was deeply shaken. He finally understood that his biggest problem was not the market, it was himself. From 1909 onward, Jesse deliberately reduced his trading. He stopped chasing quick money. He began spending more time alone. He watched the market, but he didn't rush to trade. During this period, Jesse started writing down his experiences. He tried to understand why he won and why he lost. This is where Jesse Livermore's famous trading rules were born. He wrote, "The market is never wrong. Opinions are." He also realized something critical. The real money is not made in buying or selling. It is made in waiting. Between 1909 and 1914, Jesse traded very rarely. But when he did trade, he did it with full conviction. He formed a strict habit. First, let the trend establish itself. Then join it. He stopped trying to catch tops. He stopped trying to pick bottoms. He simply followed the existing trend. By this time, Jesse was making good money again. But this time, he wasn't showing it off. In 1914, World War I broke out. Europe's economy collapsed into chaos. Fear spread to American markets as well. The New York Stock Exchange was shut down for a period of time. When it reopened, many stocks had already collapsed. Jesse Livermore made money from this decline too, but this time, he stayed out of the spotlight. He had learned that too much fame can be dangerous. Between 1915 and 1920, Jesse slowly increased his wealth. He became a multimillionaire, but his behavior had changed. He lived in large houses, yet he wasn't very social. His personal life began to deteriorate. His marriages were unstable. Relationships kept breaking apart. Jesse's mind was always in the market. He didn't know how to rest. In the early 1920s, America entered a period of rapid economic growth. The stock market began to rise sharply. People once again started saying, "This is a new era." Jesse Livermore made money in this rally as well. But internally, he remained cautious. He saw people borrowing heavily to invest. He saw stock prices rising faster than company earnings. He saw emotion replacing logic in the market. Between 1924 and 1927, Jesse made massive profits. He once again became a major name on Wall Street. But this time, fear lived alongside confidence. He knew he had fallen from this height before. He kept repeating his rules to himself. Trade less. Be patient. Cut losses quickly. Let profits run. But human beings don't always follow their own rules. By the end of 1927, Jesse Livermore was extremely wealthy, yet his mind was restless. He felt the market was hiding something. 1928 was approaching, and history was once again preparing to repeat itself. Jesse Livermore believed. He was ready this time. At least, that's what he thought. By the end of 1928, Jesse Livermore was a multi-millionaire once again. But this time, he wasn't playing just to make money. He was playing to understand market psychology. Throughout 1928, the American economy was growing rapidly. The stock market kept climbing higher and higher. Everyone seemed to be getting rich. People were buying stocks on loans and credit. Speculation was everywhere. Jesse Livermore saw something most people ignored. This growth was not sustainable. Production was increasing, but consumers couldn't keep up. Debt was rising. Savings were falling. Stock prices were far above real business earnings. The market was irrationally high. Inside his private office, Jesse analyzed the market with a small, trusted team. He studied historical patterns, the panic of 1907, earlier crashes, and recurring stock price behavior. His conclusion was clear. The market will collapse next year, and I will be ready. In early 1929, Jesse quietly began building short positions. He told nothing to the public. He even gave misleading signals to brokers. Most people believed the market would keep rising. Jesse bet on the opposite outcome. By September 1929, the first minor corrections appeared. Jesse increased his position slightly, watching how fear might spread. In October 1929, small crashes began to hit the market. Investors were confused. Newspapers called it a temporary correction. Jesse continued shorting. Then came October 24, 1929, Black Thursday. The market opened and immediately collapsed into panic. Trading volume exploded to a record 12.9 million shares sold in a single day. Jesse Livermore remained calm. He held his short positions. The public was dumping stocks in fear. Brokers were becoming desperate. That day, several banks and brokerage firms came close to collapse. Jesse's profits kept growing. Fear in the crowd and confidence in Jesse reached extreme levels. Then came October 29, 1929, Black Tuesday. The final collapse. Nearly 16 million shares were sold in one day. Stock prices fell more than 30%. The total market loss reached billions of dollars. During the crash, Jesse Livermore made an estimated $100 million in profit. At that time, the number was unimaginable. In today's terms, it would equal billions of dollars. Market historians believe Jesse Livermore executed the largest short trade in history during this crash. He held his positions with patience. He never panicked. He never became greedy. He followed his rules. Follow the trend. Control position size. Cut losses quickly. Let profits run. Jesse's approach was purely psychological. He didn't try to manipulate the market. He read the emotions of the crowd and profited from them. The crash destroyed public trust. Thousands of banks closed. Millions of people lost their life savings. But Jesse Livermore became a legend. The media began calling him the Great Bear of Wall Street. Some saw him as a hero. Others saw him as a villain. The 1929 crash also fueled Jesse's ego. He began to believe he was untouchable. Friends and family slowly distanced themselves from his fame. His personal life started to deteriorate. The crash made Jesse incredibly rich, but it also placed a heavy psychological burden on him. He realized something painful. Understanding the market is one thing. Controlling your own emotions is another. For Jesse Livermore, the 1929 crash was both a triumph and a warning. The market can be beaten, But ego and loneliness are far harder to survive. After the crash, Jesse's fame and wealth were at their peak. But his personal life became completely unstable. Divorce, depression, isolation. These slowly became part of his reality. After 1929, Jesse promised himself he would remain disciplined. He would follow his trading rules even more strictly. But human nature and emotional weakness kept challenging that discipline. In 1932, market volatility intensified. Jesse took both short and long positions. But emotional trading started hurting him. During this period, he lost a significant portion of his wealth. His life became a cycle of comebacks and failures. In 1934, he suffered a major loss. Millions of dollars disappeared. His confidence was shaken once again. Jesse entered a phase of deep psychological distress. He became highly introspective and increasingly depressed. He replayed his past decisions and regretted his broken personal relationships. Between 1935 and 1938, Jesse returned to trading and made some minor profits. But he was no longer the aggressive, fearless trader he once was. Market volatility and emotional pressure drained him mentally. On November 28, 1940, at the Sherry Netherland Hotel in New York, Jesse Livermore his own life. In his note, there was only one line: "My life has been a failure." The news shocked Wall Street and the entire financial world. People couldn't understand how the same man who had made fortunes during the 1929 crash could never find peace or happiness in his own life. Jesse Livermore's story delivers an extreme and painful lesson. You can defeat the market, but defeating your own ego and emotions is far harder. The cycle of his life was clear: early struggle and failure, young genius and rapid learning, first fortune and bankruptcy, legendary trades and global fame, ego, emotional collapse, and isolation, and finally, life end. Jesse Livermore's story is not just about trading. It is a story about psychology, human nature, and personal discipline. It teaches us that without emotional control, wealth becomes meaningless. The 1929 crash and the decade that followed proved one thing clearly: skill and strategy matter in the market, but understanding and controlling yourself matters even more. Jesse Livermore's life lessons remain relevant today. Understand market emotions. Control ego and greed. Accept losses and practice patience. Never ignore your personal life and relationships. Jesse Livermore's story is a warning to the world. If you become obsessed with wealth and fame, while ignoring your mental health and personal connections, no level of success will ever feel meaningful. Jesse Livermore's name remains legendary in Wall Street history. He is remembered as one of the most dangerous and brilliant trading minds ever. But he is also remembered as a tragic lesson. If a man cannot win the battles within himself, what is the value of winning in the market? So, we'll meet again in the next video with the life story of another legendary trader. If you found this video informative, don't forget to like the video and subscribe to the channel for more such stories. Stay healthy, and thank you very much for watching the video.